All right, perfect. So today's best setup, or really this week so far, really came from gold. Um, the markets have been very somewhat just operating on its own without any news being released due to the government being shut down. So in this framework I'm about to share, there's two things I think we need to focus on the most in terms of executing the trade, which is fair value gaps and your liquidity. Fair value gap is what we're calling the Texas Heights is the loot zone, just so you don't get that confused. And a fair value gap, by definition, is just an area of fair value where there might be inefficiency of a buyer or a seller. In this case, there were more bearish fair value gaps or bearish loot zones where there was inefficient buying going on. So price has to go back in the area, create some buying pressure in the area, and then fall off. And I'll break all that down. But the two things that I think were critical for this trade was really loot zones and vaults. In other words, fair value gaps and liquidity pools. So those are two things I want you guys to focus on. Now, these were the trades that I took and executed on. The first one was on a 15-minute chart. Entries were taken right here at this inverse loot zone. Again, a lot of buying pressure here, right? No sell candle was present until we find this candle that paints over there, which makes that area balanced. And when price trades back into there, right, we go over candles here just because we have this fair value gap or loot zone and price trades beyond it does not mean we ignore it. We still keep track of that inefficiency that was created between this candle's high, this candle's low. So as price traded back in there, I was executing shorts to take price lower. And then we had this candle, and I took price lower. I stopped right here specifically because this is a 4,000 level. From an institutional level, if you think about it, that's going to be a level where there's a lot of interest in the market, period, right? Imagine you're running a hedge fund or you hold billions of dollars. You might tell your traders, hey, if price gets to 4 billion, buy. Or I mean 4,000, buy. If price gets 4,000, sell. So that's a psychological number, and I was expecting that price could easily go from, if it's going to drift anywhere, it's going to drift to this level. And a secondary trade was taken here, so I had to get out the way because there was news release, right? The federal funds rate they actually cut interest rates, which led to this spike here. Boom. So I want to stay out of the way. Price ran up higher, then dropped back. And actually at 14:30, that's the FOMC news as well. So with a federal fund raise, if you look at your calendar, it's a two-stage delivery. You're gonna have one take place at 2 o'clock or on New York time and the other at 2:30 New York time. I tend to like to be out of the markets when those are going on and execute after that takes place. And if you're just starting, that's definitely what you should be doing. You should not be trying to be in front of a news release, especially like the federal funds rate, because that can rip your face off. Even if you have your stop loss in place, the market can run right through that. Your broker just gonna tell you order rejected, and you're gonna regret the fact that you didn't wait till news release and then execute. So, end of the day, the goal is to avoid doing stupid stuff. As much as I could have just stayed in the trade and the prices ran all the way lower, the smarter thing to do was to get out the way, let the news release take place, because you don't know how far they can move price higher before then turning it around. So you want to make sure you execute, you remove doing stupid shit. And being in the markets before news release is one of the stupid stuff you can do, especially when it's news events like the federal funds rate or CPI. So first trade executed, boom, at 10 a.m. all over here. Nice trade. We had the federal funds rate news, goes higher, takes out these highs, drops lower, It trades back higher into what is a fair value gap, loot zone, and then this shaded yellow area is a 1 hour chart. It's a 1 hour loot zone as well, and that price drops lower. So again, that's just what happened. I'm gonna break down into exact details all the way from the weekly to the daily to the 4 hours to 15 minutes to 5 minutes to 1 minute. Maybe I won't get into 1 minute to the 5 minute. That's what we're gonna get into. I just want to give you the high level of what happened when I executed on. Now, let's get straight into the weekly chart. First things first. So coming into the week, it's important to know that gold has had how many days of bullishness? Straight bullishness. 1, 2, 3, 4, 5, 6, 7, 8, 9 straight weeks of bullish price action. Then we finally had somewhat of a bearish. Well, we had a bearish candle this last week. So now we're looking to see if this week's going to continue. So after 9 straight bullish weeks, we finally look like we want to have some type of swing high forming. And if that's the case, every pullback, we're expecting when price wants to pull back, form a swing high, it should at least retrace into the 50% of the weekly of that range. So my expectations, which remains as to why I was also considering price wanting to drop lower, is I want to see price drop at least to 50% of that weekly range. So we're still short of it. We have not hit it yet. So I'm still expecting that push to 3.875-ish. We'll see if we can get that. But again, this is the range that we're working with here. Okay. So now you go to the daily chart. So that's the premise on weekly chart. Expectation. Can we get some pullback? We look like we're having some type of retracement. Let's get to the 50% level. You go on the daily chart. On the daily chart, we have a nice swing high forming, already formed. We have another distribution level here. So price create a swing high, right? Sells off here, boom. And then it created this nice little loop zone here. Again, these areas is inefficient because you see selling just took place here, no buying. So when price finally trades in there, we can expect what? It to be sensitive and a potential sell-off to take place. So that's why price traded in here, and we saw that rejection take place. And that's another reason that amplified the reason why I was wanting to short the market, was because we have this nice little loop zone in price already dropping. We have not hit 50% of the weekly range. So I do want to see if this can reject price and then drop us to 50% of that range. Where can it go? Maybe below this low. Who knows? If we're on a weekly chart, let's just kind of do this overlay real quick. Let's see where the 50% is. So 50% is around here. So there's a low resting here. Perhaps we can maybe go below this low, trade into this order block here, C4, and maybe that'll be enough for us to be done with the downward pressure and potentially resume our way higher. So, but whether that's me predicting the markets now, but just focus on what happened. We had this fair value gap here, loop zone, price trades into that, expecting some rejection. We get that. That's one of the reasons that I took the trade. Let's go on the 4-hour chart. And the 4-hour chart, I'm not going to turn bullish on gold. If you look on your 4-hour chart, this is why it's important. This 4-hour loop zone, I'm giving you guys some key game here, right? This is a game I did not get until I just back tested a lot. And I don't think anyone really even talked about it, frankly. I just back tested this a lot, so it's actually a gem here. So if you look at your fair value gaps, your loop zones, what you want to pay attention to is which one is holding up the structure. It's very important. Which is holding up the structure? So if you look very closely, this is the first fair value gap formed. This whole structure here, from here all the way to the high. The first one that formed is this one right here. So that's holding up the structure. So I consider that a structural fair value gap or a structural loop zone, meaning it holds up the structure. So as long as price stays below that, I'm going to expect sells. If we finally get above it, then I can look at buys. But until then, because this structure was held up by that fair value gap, and now we're finally below it, my mind is fixated on sells. So whenever you see some type of structural fair value gap in place, which is the first fair value gap formed in a bullish move, that is holding up a whole structure of price. If that level gets inverted, I'm expecting sells to take place. If that makes sense. So you can kind of see some of the taste of it over here as well. If you look at this fair value gap here on the 4-hour chart as well. Why this one? Well, if you look closely, price dipped into this fair value gap. See that? Price dipped into this fair value gap right here and took off. So what's holding this whole price run is this last 4-hour fair value gap, right? It's quite different from the structural fair value gap, but I just gave you guys two key elements here when you're looking at fair value gaps. This is very, very key. This is one that, again, I don't even hear anyone talk about it. This is probably the first time it's been revealed. I'm pretty sure Ice-T knows what it is, but he just hasn't really talked about it as much. So, point is, this is the one that held up price, push price higher. Look how when price comes back below it, what does it do? Boom, rejects. Trades back here, boom, rejects. Now we have another structural fair value gap right here. So as price trades below that, it comes back higher. It does two things: sweeps a pool of liquidity, hops into a daily fair value gap, trades into a structural fair value gap, and now we start to reject. So expectation where we're gonna go lower, right? We still have not hit the 50% level yet. So this is another reason why when we ran in here, just remember the blue shaded area. You're gonna see how it looks on the lower time frame. You go on the 1 hour chart. All right, 1 hour chart. So, what we have here is this level right here, this nice little C4. Okay, and within that C4, there's a level there that will be broken down in the 15-minute chart. But understand this is a nice little order block here that price trades into and then rejects. But again, I want us to focus on the teaching of fair value gaps and liquidity pools. That's where I want our minds to be fixated on for now. So on the 1 hour chart, there is a structural fair value gap that you might not have, that they might not be paying attention to. I'm going to draw it out shortly. But look how the day started. We want to see, if you want to be bearish, right? You want to see price go higher first, then reject. If you want to be bullish, you want to see price go lower first, then reject. So if you pay attention, the day started where my mouse is right now. Where were the highs? Where were the lows? If price wanted to go bullish for the day, it would have ran below some type of liquidity pool lower first, or it would have ran into some type of loop zone first. But what does price decide to do instead? It decides to go higher first to take out what? This high here. Again, if you're thinking about it, the market's open, boom. Where are the highs, where are the lows? That's the first thing you think about. If price runs towards one first, then you want to consider doing the opposite, especially if all the other things add up like I just mentioned so far. So price opens here, boom. What does it do? It goes straight for the highs, taking out what? This pool liquidity, straight higher into a structural fair value gap. So at this point, my mind is thinking this is likely to drop. We're still bearish on the daily chart. As much as the structure looks good on the 4 hour, 1 hour, we have to keep in mind that the higher time frame is still showing us that it wants to be bearish. And again, the 4 hour structure has not shifted because it has not traded above that 4 hour fair value gap. So our minds should focus on bearishness, sells. So price runs higher, taking out these highs into this 1 hour order block, and I'm gonna draw that 1 hour structure. Look one right here. Boom. See that? So that also was, this was the first fair value gap formed for this whole structure right here. That's why it's important. So when price trades back below that and closes, look what price does there. Boom, boom. It's indicating some more bearishness. If you look closer, we have another one right here. This is holding up this whole price run. As this candle does this move here, boom, it doesn't close, but the amount of aggression that it used to go through this level was indicating it's likely to keep on going lower, especially when we keep in mind all the other elements I've mentioned so far. And one other thing, if you were to look at silver, silver ran out Monday's highs. Okay, so this is Monday's highs over here. Silver ran that out. And we're going to look at silver very quickly here. This is silver right here. So silver, this is Monday's highs, right? Silver ran that out. Gold, on the other hand, silver ran this out, cool. Now let's go back to our gold. Let me not mess this up. What's this chart looking at? Tell me, it's this chart. Yes. Gold did not run out Monday's highs. It didn't even get back to the weekly opening. You're probably wondering what this is. This is the weekly opening price starting at midnight. So it didn't even go back over here. So again, everything was pointing towards a potential bearish gold as much as we want to see, everyone sees it go higher, including myself. But we got to stick to what's on price, what's in price. So anyways, so pay attention to this level here on the 1 hour chart, right, that I just drew out, the structural fair value gap. And then pay attention to this level here and look at how price treated them once it trades below it, resistance, trades below it, resistance, sells off. Let's go to 15-minute chart. Now we're into the 15-minute chart. So now this is where everything just plays out. This is where you get into more details. Once you add in all the things I already mentioned, there's even more details. Let's look even closely on the 15-minute chart. What is this right here? Another what? Structural fair value gap. Isn't that beautiful? Right there. Boom. This is the only fair value gap that exists. So the first one that exists for this whole price run. What does price do? It trades in there. Cool. The time of the day matters. 7 o'clock is when we want to start our New York session. So the trade in there, you still want to wait. 7 o'clock comes, boom. Now it does a turtle soup, a flashbang. It runs higher, take out its full liquidity, but still rejects. We didn't even have bodies close outside that level, right? So now it rejects, creates a nice what lose zone here, okay? And then what does price do? Trade into that, right? And we get the sell-off. This is even significant because just from this run here to here, you also want to look at the 50% of every range. That's when you want to be executing. So 50%, right, is above here. So price trades literally. Bodies never close outside the 50%. Look how it stayed at a 50% level, but it traded higher into this what? Premium loot zone, right? Premium because it's on the upper threshold of the 50% level. So if you want to sell, you want to be selling above 50%. If you want to buy, you want to be buying a discount below 50%. That's a premium because it's above 50%. So now price expensive. We want to be selling there. Okay, so I'm doing this fib. So price trades in there. And what do we have? Wick after wick after wick. That is indicating to us that there's weakness with all the other elements that are in place. You want a 5-minute chart. Back to this area real quick. In this 5-minute chart, you can see again another nice little loot zone. So even on a lower time frame, you can see the loot zone right there. And then what does it do? What you want to see is whenever there's a loot zone, you want to see a high right beside it. That's a powerful price pattern. Whenever there's a high, which is a high right here, and a loot zone, you want to see price run that high into that loot zone. Because think about it. It's taking liquidity and going to a level that's considered fair value. So that's wonderful for institutions to execute their positions. Because they're doing two things, taking liquidity and then entering a level of considered fair value. So that's two powerful things. And on top of that, above 50%. So there's a lot of things going on for this trade here. And we see a lot of wicks. So even if you didn't get in the first candle, you see the second candle, the third, the fourth. I mean, it was just there giving it to us. And sales were taking place right there. And then price drops to what? The 4,000 level. Okay. And then that's that for this one, right? 4,000 level. And then you're probably wondering, what is this RTH vault? RTH vault. Let me now give you another element of price as well. Well, before we get into that, and then look at the 5-minute chart here as well. You see this here on the 5-minute level. We had this nice little, after we had this one wick up higher, lower, then we have a strong price action here. Boom, giving us a nice little loot zone, nice little fair value gap. What is this right here? A nice little swing high on the 5-minute chart. Price trades into that, take out these highs. Look, the way I look at price is, if there's a high, there's high. If we believe price ran by an algorithm, once the high is there, all the algorithm sees is the high. Because it's data points. So I don't really say, well, this is not really as significant of a high. My mindset is, this is a data point. It's clocking it as a high. Once price runs above that level, the algorithm clocks it as a high, and now it runs to a fair value gap. This could be easy sell off. So anyways, we have this high right here. Price trades higher, and we have a nice little melt off to this RTH vault. RTH vault. What is that? Regular trading hour vaults. You want to keep track of those levels. So now I'm gonna take you guys even further into the future of how you want to look at price. And I didn't start looking at this till maybe 2 years ago or so. We want to pay attention to where are the vaults, where are the liquidity pools on the regular trading hour charts. That will also give you insight into where price is likely to go to. So if we're to take one step into the future of a trading analysis here, let's go to regular trading hours. Boom. Okay. Where is the pools of liquidity? Okay. The day started up here. So the markets on the futures market in gold, It closes at 4:15, I believe, New York time. It opens at 9:30. So that's why you have this big gap in price. It doesn't show the price actually happens overnight on this chart, on the regular trading hour charts. It just shows what happened within the trading hours. So where's the liquidity pool? There's one here, and there's one up here. This one right here. So when the day started, this was a vault right here. When the day started, we gapped up above that vault. We gapped up above this level. So what is that going to make a lot of retail traders think? Bullishness. We broke above the highs. It's breaking out because we had a strong gap open right above this high. So there's going to be breakout traders chasing down, wanting to get along. And all price does is it sees now. So now where the vaults? Where are the vaults? Here and here. So my brain, I'm looking at how we can eventually get back all the way down over there. As much as price has gapped up, price looks bullish. I understand we're in those higher time frame premium levels, daily fair value gap, 4-hour structural inverse loop zone. I'm looking at all of that. And I also see that there's clear liquidity on the lows. So frankly speaking, I wanted to hold this trade. I knew, and I'm not a fortune teller, but I knew we were gonna price is gonna drop here. I was texting Valentine about this stuff. I was like, price is gonna go lower. Like I see 3960. And this is wild seeing 3960 because this is a clear, like just low hanging fruit right there that price could easily tackle. So you want to keep track of these vaults. Now, if I put on my electronic trading hours, you're not going to see this as clear as day. Regular trading hours are clear. Let's go back to electronic trading hours since everyone trades that. But just keep in mind when you see RTH, I'm pulling from the regular trading hour vaults, our charts. Now you see, it's not clear anymore. Like the vault is here. So most people are not going to look at that. And then there's one here, which you might look at if you see this low right here. But for the most part, something like this, you wouldn't really consider this little low as significant. So, anyways, just going back to the 50-minute chart for a second again. So anyway, secondary trade was taken here. Again, everything explained. Loot zone right here. Look at a 1 hour, I already showed the 1 hour chart, but loot zone right here on the 50-minute chart. And expectation we're gonna take out these lows and then eventually take out this low. And what do you have? Whoop-de-doo. Price hits that low and just comes off of it. So it was a very complete trade. I mean, if you were to hold from the top, which it was gonna be tough because of this news event, but catching two different trades is solid. But let's imagine holding from the top. That would be sick. $100 drop. That would be cool. But even regardless without that, still caught nice movement. This $38, risking 10 to get 38. Solid. And then here, risking 13 to get 59. So about 90 something. So we almost got the same thing we've caught by holding the trade regardless. But it just shows how beautiful price can be when you're paying attention to those fair value gaps, those loot zones, and also you're paying attention to where are all the vaults on the regular trading hour chart. So that was pretty much my breakdown on the best trade of the week so far, gold. And I do think we probably have some more further downside to go to, but that's to be determined. The purpose of this specific video, we're breaking down the best trade setups of the week. So I hope that was very, very insightful for you guys.